All right, everybody, it's Jeff Scott. I'm back again on sort of my mini seminar weekend. Let me just fix this around. Give me 1 second. Perfect. So, as I started this weekend on Friday, what I wanted to do was do much more than my usual weekend review. Inside of give you a little bit of basic background to how I trade and how I make money, and not just what stocks I'm going to buy. So here we go. My wife just came and interrupted me, but that's okay. So how this weekend is about my comment: be your own guru. The tools I use to trade profitably and still have a life. Speaking of my life, this lovely lady here in the lower left-hand corner is my bride of 35 years. Be careful of blind dates. They get you drunk. 2 days later, you propose, and then look what happens. You're still married 35 years later. Hard to believe she's 60. Great woman. But enough of that. Let's talk about trading. As always, for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. No one pays me to say good things or bad things about their programs. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I use options and portfolio margin. So when you see, or earlier you saw, because you're not going to see them on this, my results, they don't pad the results, but they make my investments act like they're bigger. And by that I mean, I think it's easier for me to make money because if I have twice the funds to be trading with, I need half the return to get to the same result. So clearly they juice me, but remember they also fall twice as fast too. Do not use them unless you know your risks. So I got some questions that were not previously answered, which I'm going to do right away. I got a couple of stocks that interest me that I thought I'd look deeper in a trade. And then over the last couple of hours, I have had a number of questions come in. So let me start by responding to a couple of questions. Hey, and I love it. And this one starts, thanks again for time and effort you put into webinars over the weekend. They were great. I have a couple of questions. Are the red and green crosses displayed on your TradeStation charts that appear potential resistance and support elder indicators? I have this suite of indicators and they look familiar. No, those are from Sagar. Only elder indicator that I'm using right now besides force is the impulse indicator, which changes the color of the paint bars in a couple of my TradeStation windows. How did I find a program we use for TradeStation? A lot of them exist. I use a guy overseas that does a great job for me, and he's relatively affordable. If anybody wants a referral to Martin, just email me and I'll send you the contact info. Is the Roy Kelly deal still available? He gave my followers, whatever that means, a $3.99 price on the cycle. I have his entire suite of tools. I used mostly the cycle finder, and then I play around with some of his automated systems. The guy is very smart. He's put together some interesting things. He has a live meeting July 29th in Sacramento that I'm planning on going to if my wife will let me. And I will see what I can negotiate when I see him live, but the $3.99 deal still exists. The dynamic trend platform options looks interesting. Yeah, Joseph Arnold's a genius. I'm sure many of the folks that are wizards at TradeStation or Thinkorswim said that that's something that they can do in those programs. You probably can. I find it much easier in dynamic trend. It's not an add-on to TradeStation or Thinkorswim. It's a freestanding product, and it's co-marketed by VectorVest, and they don't give you any discount buying it from them. And Joseph Arnold will sell to you directly, dynamic trend. As far as I can tell, the program is the same. One of the old-time guys, JG, asked about on-balance volume in HGSI. It's in HGSI. I use it in HGSI, and you can make it look like somebody that you might follow who has TradeStation OBV with a moving average. You can place a moving average on top of the OBV in HGSI, and I use it. And he had a couple other questions, 2-day charts. I have no control over HGSI. All right. let's address the questions here in a couple seconds. So again, it always matters to me where we at in the market. I feel like we're on the shoulder, either in the red circle of sell or getting ready to jump up with another leg up. This is a broken record story because over the last several years, we've seen this over and over again, except in February. And I do expect us to have corrections from time to time. We sold off hard into the week, into the day on Thursday at the end of the week, and perhaps that was just people, deferring risks over the weekend, especially with the rising COVID cases. And maybe we'll bounce. When I say sell off hard, it's a couple of bearish bars on an hourly chart or our 15-minute chart. I think the market ends the year higher than it is now, but I'm certainly, thinking that we're in the summertime. Last week was historically great for seasonality. It weakens out here. And therefore, I'm looking at how I protect my money. But buying protection, buying insurance, buying puts, for example, is just like buying disability insurance. You spend a whole lot of money on it. When you finally retire, you're really pissed because you wasted, per se, a lot of money. But God forbid you need it, you're glad you have it. I spend a lot of money on puts. It hurts my performance. And as I talked about before, and again, this is from Turning Point Analytics, I can't make better charts than this. There are 8 trades on this chart. These are the trades I'm looking for. I'm looking for a stock in an uptrend that pulls back to support and breaks out. This support could be a 50-day moving average. It could be an auto or manually drawn trend line. It could be, we'll see plenty of them in my review of some of my favorite stocks. This is my favorite buy because you're already in an uptrend. You've pulled back, gives you a lower entry. And the beauty about this buy signal is your stop can go just below the green line. Your stop and your buy price are very, very close, which means your risk is small and you can take a big position. My second favorite, or among this buy decisions, is this one right here. The stock's been in a downtrend. It's starting to bottom. It breaks above a descending trend line. It retests. That retest to me is very important because so many of the leaders that I've bought and watched retest and then they take off. So I'm looking for that retest. Why is this beautiful? Because again, I have a very well-defined position for my stop. If it breaks down below the trend line, I don't want to be in the trade. So hopefully I can have, again, a narrow difference between my buy point and my stop. The third long trade is buying in a Darvis box, a bounce off of support. Again, why do I like this trade? Because I can put my stop just below the line. Now, if I'm wrong and it breaks right through, I get stopped out right away. And the fourth trade, which really isn't shown here, is breaking above support. But it turns out it'll look just like this one does here. And you'll just have the trend line starting here. Those are my bullish trades. The bearish trades are the same. And this guy, Turning Point Analytics, Jeffrey Marcus, has got some algorithmic tools where he's able to pick these up using math. So let me move this to another screen and let me start addressing some of the questions here. How do I save a snapshot of the market? It's simple. You pull up whatever list you want to look at. So typically if I'm saving a snapshot, I want a broad list up at all securities. And then I'm going to go and I'm going to find in, I don't know if it's Ron's. I guess you can try to just do this. Go into this and type archive. And you're going to find, well, I have right here, 09 archive view all stocks. All it does is it's a group index no, so it picks all stocks, ranks it by stocks and groups moving to the upside, and I pretty much move the kitchen sink in this because I don't know which things I'm going to want to go back and look at later. So I have 8,908 stocks. File, save as HTML. I already did it, all securities. I usually put a date on it. I hit save. Now I'm not going to open it up because it will take forever because there's 8,900 lines. But now you have a view. So let's just do a smaller one, okay? Let's go back to my buy watch. And that's fine. And let's save this, 5.7 HTML, by watch. And now I could take an Excel spreadsheet, for example. Open, browse, let's go find it. I know where it is. It's in here, HTML. And it's only 30, 40 stocks. I'm going to hit buy watch. And it all opens up in a spreadsheet. So all that information that's in that warehouse view will stay here. And then there's things that I can do in EdgeRater and other ways that I can utilize this and go back and back test. I've got these saved for most weeks off and on for about 20 years. Sometimes I forget. And I use these to go back and ask questions. All right. What else did I want to do? So that's easy, saving a snap up. Group performance review. I already killed last week's charts, but let's ask the question. If I had the buy list, the different watch lists, they're not all buy list here, and I wanted to know how they performed over the last week. It'd be really good if I could tell in advance how they perform over the next week. Tools, group performance analysis. Choose group. So I'm picking, actually, let's look at this, because this will be absurdly high, but it's not fair. Double click that so everything lines. And I've learned I don't want the heading. I don't want trading stock basis because I never look at them. Buy watches, I want these. I don't care about the giant buy list. I'm interested in the various Ian and Ron groups. But I've already got in their best under 15 and HGS 100. And so now I've collected the groups. And again, this is stuff that I picked this weekend. So asking how they did the last week, since most of these are bullish groups, I'd expect them to have done very well. I'm going to hit OK. I'm going to set my start date. Today is the 5th, the 6th, 5th. So I'm going to do that one, and my start date then has to be 1 week ago, the 28th. From closing price, I'm going to hit OK. Test. I'm going to hit save. It's going to look at the charts, and now it's going to take every group and say if I bought the group here on Sunday the 28th at the end of day, which means closing price on Friday, and I sold it on Sunday the 5th at end of day, closing price this Friday, then how would I have done? And again, I picked stocks in these groups because they had a good week. So of course they did good. If I look down here, I've got stocks and groups of downside, sells, negative, downside, short sells, reversal of downside, and trade station sells. So this shows me that the stocks that I say are doing bad, were doing bad. Well, we know that. That's why I said they're doing bad. And, you know, no one's going to pick a group that's up 24.5%. That would be incredible. But that's looking at the stocks who were up big on Friday. They were up on the week 24.5%. The best of Woodward Brown would have been up 14% if you bought them last week. The point is, I like to do this retrospectively and look at the data from a week ago and how they performed. Let's say I wanted to look at movement off the bottom. Group performance analysis. And I put together a group. Here, let me clear. Hold on 1 second. Called boxes from the bottom, 323. Let's click all those boxes. Let's hit OK. And now I want to look from March 23rd, 2020 to current. Closing price to closing price. I'm going to hit OK. I'm going to just hit test again. Hit save. Yes. And this shows me from the dates I identified from box to box. Now, Ron Brown sent me a GPA showing that most of the Woodward and Brown groups that you picked them on March 23rd, you would have had a great period of time here as well. It just, to me, shows that growth stocks with good earnings, outperform off the bottom. And you could see the S&P is up 40%. Just having an ERG of 240, you're up 46, and all the boxes are up greater, up to as high as 92%. That is the GPA. How do I make the boxes? All right, let's make a new set of boxes. Let's go to all securities. Let's hit warehouse view. Now, one thing, I can always open up my views, type in boxes. I may or may not have anything pre-made. Can't remember. And I don't see any boxes. Here we go. We don't want box 127. This is what I want. So this is in Ron Brown's group. ERG 240 box stocks. That means you have to have an ERG of at least 240 and be in a box. Let's highlight that one. Let's hit OK. So our 8,000 stocks in all securities drops down to 124. If I look over here, I can see box 10, 9. I can just flip it around the other way. I've got box 1, 2, 3, 4, 5. Now here's the magic. You go up to this little thing here, the spectrum analysis. You click on it. You want to go into load custom slice options, and you want to type in HGS under file name, and you find box stocks, and then you open that, and it automatically takes the stocks and puts them into their groups. You could see 124 stocks, 124 stocks. You can see the breakdown of how many are in each group, and then the magic button is this right here. You hit that. Let's call this Demo Boxes 7.05.2020. And I hit OK. And now, more magic. Let's go to User Groups. And I got Demo Boxes 705.2020, Box 1, Box 2, Box 3, Box 4. And you can do your analysis using these boxes. Such an amazing tool. I had a question about EdgeRater. Let me go and address that one real quick. I left, my wife and I did a 2-day trip on our boat. We have a nice little boat here in Florida, and we had some friends last night and other friends today. And we came home to no power, which would really suck. But we have a whole house generator, so now we're trying to sort things out. So we have tons of power. The air conditioning's on. I got internet. But two houses in the entire neighborhood have no power from the electric company. We're one of them. So I may lose internet at any time doing this. All right, I'm just running the update. And I'm going to pause while it's running the update. Okay, it's updated. So how do I use EdgeRater? First thing I do is I want to show you the groups. Now, I add my own groups to it. If it's got this, I don't know, parentheses, brackets, they're standard in the group, which means he's updating, he being Chris, and curating them. For running things like the Hindenburg, I have my all NASDAQ and NYSE. I've got stocks that I like to buy from, price and volume. I've got a trading universe, which is bigger. Don't need both of those. I'll kill that later. And then I have my own favorites. So every day I run the Hindenburg Omen. So I'm just going to run it very quickly on all NYSE. Talk a little bit about how I use it and why. All right, we'll run the NYSE. I'm going to hit this and I'll pause. So this is the report you get from the Hindenburg. And if you notice, it's looking at a number of characteristics. It's looking at new high, new lows greater than 2.2%. It's looking at a rising moving average. I think it's supposed to be the weekly moving average. It's looking at McClellan oscillator less than 0 and new highs less than or equal to twice the new lows. Well, what does this mean? Where did it come from? So, what is a Hindenburg Omen? The Hindenburg Omen is a strong warning signal for a market top. Ian didn't create this, but he certainly popularized it. It's when the herd is buying, and we're the herd, the amateurs, and the pros are selling. 5 criteria, looks at numbers of NYSE highs and lows. With the smaller of these greater than 79, that's a parameter that you can change. That the NYSE 10-week moving average is rising, and the McClellan oscillator is negative, and the new data highs and lows. Confirmed Hindenburg omen occurs with a second or more omen signals triggered during a 36-day period from the first signal. Why does this matter? Between 85 and 2005, 6 out of 23 or 25% that the Hindenburg omen fired, it picked up the large declines. There was not a large decline without the Hindenburg omen firing. Even when the declines were small, there were declines. When you start to see Hindenburg omens, especially a Hindenburg, that should make you realize that the market is likely going to correct. If you look back in 2006, you could see, again, an old Ian chart, that as the market ran up, you started to see in red these Hindenburg omens started firing. Now, if you'd sold on the first one, you would have been disappointed you missed the run up, but you would have missed the run down. So you have to combine these with other things. All right, but it should stiffen your neck and your back that there's a fall coming. One by itself, there was a little drop here, but nothing meaningful. But it wasn't until 2007. You thought the market rolled over in 2018, where we had a 14% drop. If you look at the next slide, what happened in 2008, we had a double top, kind of exceeded the prior top a little bit, and then the market sold off hard. Now, would you have been helped if you had been following the Hindenburg omen and knew that it was coming? The answer should be yes. So when I see Hindenburg omens that are confirmed, this was back in 2018, and it showed that on several occasions we fired new Hindis and the market sold off. It still works. I should update Ian's slides because I've got the data to support it. I look at the Hindenburg omen, and I can see here that the last signal we had was February 24th. Prior to that, February 3rd. 27th to the 24th. There's 36 days or less. This was a Hindenburg omen that preceded the large market sell-off in 2020. So I run it on the all NYSE. Make sure if you're creating the Hindi file that you include the spider because it uses the spider for the moving average, whether that's right or wrong. But this is, to me, a very useful tool. Let me point out a couple of other things. You're getting a lot of education this weekend. I hope you guys don't mind me taking the time to do this. If you look at a lot of charts that are out there, I started several years ago creating the Hindi indicator up here. Now, there is a problem in HGSI, not in HGSI, but in the data. The data switched, and it turns out that the current data and the old data had some aberrations where I used two different sources. I used the HEI All NYSE Index, and I use the bar chart market indices. I put them both in the same window, and if one or the other one or both fires, I get the red line. So I'm able to see the Hindenburg omen, which is an impact on the market as a whole, on every chart that I look at. So it's in HGSI as well. All right, what else do I want to teach you today? Next thing I do in Edge Radar, after I do the Hindenburg omen in NYSE and the NASDAQ, I want to look at the buckets. I love the buckets. So why do I love the buckets? The buckets take all the stocks, and I did this wrong. Let me hit the X. X. All right, it's not going to let me do it. The buckets take all the stocks in the S&P 1500. That's what I did wrong. I forgot to change it up here. And it looks at their stock within their Bollinger Band, and it helps us to understand where the market is. If all the stocks are above their Bollinger Bands, then you know this market is very oversold. If they're below their Bollinger Bands, if above it's overbought, below it's oversold, And if it's in the middle, then it's a market that doesn't give you a signal. I don't care about the NYSE. I do care a lot about it, but I don't know what it means because that's not what I use. So I'm going to find the S&P 1500, which I know I put in here, but also it's a standard one. It doesn't need anything special. It's probably right in front of my face, which is the best place to hide things. Turns out S&P 1500, it's going to run. And let me show you the power of the buckets. I did this chart a few years ago. This here is a very oversold market. And when I see this picture, both stocks in the red here below their midnight, their Bollinger Bands, 84%, 90%, 88%. Number of stocks below the Bollinger Bands, 35%, 35%, 30%. I get all excited. And you can see I posted on the HGSI board here. And I talked about going back to 1994, today's number of stocks trading below the Bollinger Bands is the 45th highest, which means about 0.1% of the time. So that's important to me. Tied for 84th for the most stocks trading below the midline. So that was concerning. Now, I was all excited that we must be getting near a market bottom. And then I looked back at 2008, October, and I put this slide together and I use it when I teach because it shows you that even though I get excited that we're getting near a reversal, in a bear market, it can take a while and you can get really oversold. And you were right here on the 7th, over 70% of the stocks in the S&P 1500 on the 7th and on the 9th were trading below their Bollinger Band. So even though oversold, you expect a bounce. Even though oversold, you expect a bounce. It may take a while, especially in a bad market. Now, here is why I like this, because I started looking at this and tracking it, and lo and behold, when you get really high above the Bollinger Bands, certainly in a bull market, you're going to have a little bit of a pullback, although sometimes it's just a little nubbin. But when you're in a deep pullback and you start to get a lot of stocks below their Bollinger Bands, you can find the reversals. I've said multiple times this weekend, you make most money at extremes. I use this to find extremes. 2/3 of the stocks below the Bollinger Bands, that shows evidence of weakness, but not overdone, and very few stocks are below the Bollinger Band. So if you were to ask me what is the signal that I see here in the buckets, I would say it is showing me a market that is getting oversold, but it's clearly not oversold to an extreme. All right. So what else do I use in EdgeRater? And I hope, part of why I'm doing this is I know people end up buying stuff because I buy them and I use them, and then they don't get anything from them. I'm trying to show you some things here that I think can make a difference. Now, if I could get Chris to change something, I would have him change this. The U.S. market summary is another one of my favorite things to run. But I got to change the data source off of EdgeRater, which is where you want it to be most of the time, to HGSI, because not all the major markets as defined by this template are in EdgeRater. I think he needs to fix that so I don't have to do that anymore. Hint, hint, hint. So this run, I see everything is green. So what I have here is the major markets, one-day change. We talk about the kahunas on stocks being big momentum. Often you get a line of kahunas in one direction or the other, and they impact the market going forward. The Woody indicator is the buy-sell on the market, percent B times bandwidth. When it's green, it's safe to be long. And you could see that we have had a number of bearish kahuna days, and they have not been able to convert this market to a bear market, which I think is really weird. I don't understand it. I'm surprised. But you got to play the market you have, not the market that you think you should have. What else do I do in EdgeRater? I might look at Code Blue. If you want to look at stocks to buy, so let me just go to my prospecting one. All right, and I run this, It's going to look at some of Gil and Chris's indicators. This is and it's going to show stocks that are potential you might want to be looking at for buys. And this is the order I go through. And so I can tell you PAGS is a stock I'm interested. EDU, I just been burned in it before. SQM looks very good. PDD looked interesting. So these are a lot of the stocks that you're going to see on my buy list actually showed up on code blue. Now, if I was bearish on the day, I could run code red and see if anything runs up there. All it is I'm using a scan to identify a set of stocks that might be bullish or bearish depending upon the scan. And so here we go. We got a bunch of potentially bearish stocks. Now let's go back at the list. Let me tell you what else is really amazing on this. I built some with Chris looking for ABC up and ABC down patterns, pullbacks in an uptrend, retracements in a downtrend, the warehouse view. Let's say that I'm interested in understanding how stocks have performed, what stocks led a week ago. So I'm going to change the settings and I'm going to find that warehouse view that I saved last week. Well, I know my filing system, and down here in transfer 628, I have a lot of computers. This is how I share data between them using Dropbox. Here's all securities. Last week started, let's see, do that will bring me close, and then let me go back a week. So last week ended on the 28th. Whoops, I want that to be the end date. So the first date, so it started on the 21st, of Sunday. It ended on the 28th. So June 21st, June 28th. This is what the stock's fundamentals were at the time. I'm going to hit OK. And let's see what we get. I've got to run it here. And this is amazing to me because if I want to know what's working now, growth, things off the bottom, I go into the dashboard. And what does this show me? This shows me that as my ERG got higher, EPS rank plus relative rank plus group rank, my performance went higher. This was not a good week in the market from the 21st to the 28th. But stocks with higher growth stocks outperform lower. Patients who had higher relative strength rank, over on the right-hand side, were less bad than people with no earnings. High relative strength on the week beat low relative strength. Group rank didn't seem to be that important, although the better group ranks outperformed. Stocks that were accumulating going into the 21st also did better on the week. So I can learn a lot from the market. I can look at how many are in each of the different boxes, etc. And this gives you a gain based upon box. So that's another thing that I use. There's a lot amazing free parking. We talked about the 50-day moving average. Let's just run it on my prospecting. And you could see stocks that are at free parking, uptrend or downtrend, whether there's an ADX trend, RSI, and then some various parameters. And then you have seasonality. And what I do with this is I run it and I hit my arrow and let's let that run. All right, my commissary has got me my dinner coming, so I got only a few minutes left. So I run seasonality. I typically look 1 month out. If I go by average return, you see some really big returns here. That's exciting, but it doesn't help me when I see the years. I only want stocks that have been trading at least 8 years. So what I typically do is I go to number filters greater than or equal to 8. And then I go to the down. I don't want more than 3 down years, no matter how many up years I have. Less than or equal to 3. And now I look at it, and now I'm going to do by average return. And what I have here is showing me the stocks that have had high percentage wins, no less than 8 out of 11, and this is their return. I got to tell you, a week ago, seasonality looked a whole lot better. So I think that just shows the power of last week. To finish up here, and I hope you guys have got something out of this 3-day or 3 programs. I have enjoyed doing them. I miss the live meetings so much. Got to be so much fun to do another one, maybe even pull Ron Brown into doing one. But we got to wait for COVID to go away. So this was my buy watch list for this weekend. They're not all good stocks. They're stocks that are either there already, they're setting up. And then what I typically do, and this is just what I do, is I break them down into categories. And the stocks that typically I'm looking at on Monday are going to be in this list. So I'm going to pick one stock from this list, and let's talk about how I'm going to trade it. Let's take Allogene Therapeutics. They're not a customer of mine, so I'm allowed to trade it. The first thing you're going to know is that its ERG is kind of sucky. Its ERG is sucky because it's an early stage biotech, 212. It's really okay. EPS rank sucks, while relative strength rank is very high, as is the group. All right. So this is a company that doesn't yet have products on the market. Now, a week ago or 2 weeks ago, I talked about Halozyme. So let's look at Halozyme real quickly. Halozyme this is my uptrend pullback to support into breakouts. This was 2 weeks ago. And Halozyme has been a bear ever since I talked, not a bear, a bull. I better use the right terminology. This is what I want to see. This is what we all want to see. What a great move. And I know my neighbor Kathy still is holding it, and she's very happy. And you could see the earnings per share coming into it. But I'm interested in Allogene. Let's look at Allogene. Let's talk about why and how I would potentially trade it. I'm seeing here a high tide flag, especially from right here to there. Let me draw on this. I'm going to draw a couple different things for you. First thing I notice is that we went vertical right up here. Now I also notice, let me get thin here. I wish I could do that and get thin as my body. I had a flag here. You can do all kinds of things here. I could have drawn up like this with a wedge, but we broke out of that flag. I think Ian used to teach us that if you go from the bottom, say about 30 up to 54, maybe you can get about 2/3 of that. So that's 24. Maybe there's about 15 to 20 points in this. That would take me up to 64. That's a huge move. I'm very interested in that. Now, supporting this story is I got a mobile breakout from a squeeze. I got a person buy signal here. I've got my market catcher getting stronger, and I've got a big kahuna. So I'm interested in Allogene. Now I'm going to go into my trade station and just look at it very quickly. I'm going to my screener, and I know I put Allogene here because I like it. That's all stated. No, that's Bears. Never mind. Here's Allogene. So here's an automatic trend line on the daily from Cigar and a person buy signal occurring. I like that. I'm in a person sell because we're selling off of the flag. I can live with that. My Laguerre RSI on the daily is going positive. On the weekly, it's negative. We're pulling back in a flag. So this is actually an interesting trade because it's a downtrend breaking above it. It's also in an uptrend overall and breaking above its support. So a lot to like here. You can see here it's in a squeeze. The high jump was maxed out early on in the move, and now the high jump is not a problem. So I like that as well. I go into the Q indicators, and this is sort of an indeterminate day on the weekly. That is a go with flow signal. Not perfect. I'd rather this be blue, but I pull back to support. I broke out. I've got room to run. Probably, 55 is one area of resistance. 51 is another. My target, I told you, might be as high as 64. I like Allogene. Now, I'm hoping there's options traded on it, or I'm going to be disappointed because I would have screwed up. So let's look at it real quickly. Let's take a look at options. This is a biotech play. They make a version of CAR T therapy that instead of me sending the patient to the hospital for a $500,000 bill, I'll be able to do it in my office, which is much better for the oncologist. So we're CAR T drugs. Kite and Juno were two publicly traded companies that got bought out. So where CAR-T drugs have failed in the market, I think they've got a winning formula. So here's just the basic chart. So looking at this, I'd probably wait till it got above the high of the day. I'd probably wait till I would buy it if it takes out the high, so say 46.40. So I'm looking at a 45 strike price. All right. So, and I want to go 5 on the minimum range, and I'm bullish. These are my bullish spreads as we saw before. So let's take a look at these. If I was to buy 100 shares of Allogene, it's going to cost me almost $5,000. I have unlimited risk. My maximum unlimited gain, maximum risk is $4,500. I have no problem with that. If I buy a long call for $200, I can control 100 shares of stock, much cheaper. My maximum profits are the same. My maximum risk is only $200. Well, why would I do this when I could do this? Because if I own the stock, I don't have a time limit, all right? This is set up with the expiration of July. I probably would not do that. Let's see what happens when I change my expiration to August. These aren't changing, are they? All right, so I'll change them as individuals. So if I change this to August, it's $460. I've got to the third Friday in August for this to go up $4 from my current price because I'm paying about $4, $4.60 a share. But the beauty of the calls, I get all the gains. If this company got bought tomorrow by Novartis, you get all the gains because the stock's going to trade up close before expiration. The most I can lose is $4.60. I got no problem with that trade. How about doing a synthetic? So let me edit this and change it to August. I wonder if our power just, let's hear my power click. Maybe our power came back on. Well, that would be okay. Here you could see that my break even is 45. It's a synthetic position. It's free. The put and the call are the same price. My maximum risk is the whole thing, just like owning the stock with infinite gain. So if I have the exact same pattern and I'm one, on the left, I have to pay $5,000, and on the right, it's free. Which do you prefer? Now, let me tell you the biggest concern I have with this trade here. Man, it's free. I can buy hundreds of these, and I know I'm right. I'm going to be a zillionaire. I'm going to be Warren Buffett. They're going to be writing books about me. The problem is, you can't buy more of this than you can of this because you run the risk it's going down to zero, just like this one does. They have a negative trial, they drop 30%. Risky trade. What about a bull call spread? Now, I thought the stock might go up to 64, so let's edit this, and let's say I'm going to buy the August here, and I'm going to push this price right up to 60. So this isn't a bad trade. I'm telling you that right now. My maximum profits, I can make $1,115 if it goes all the way up to 60 before the third Friday in August. All I can lose is $385. So it's cheaper, $80 cheaper than the call. My maximum risk is only what I'm paying for it, so I have less risk, but I've capped my gain here. So I've sold a call, but that's pretty safe because what's the likelihood of it going above 60? Well, if it gets bought out, it's pretty high. What about shorting a put? Definitely not a trade I'm interested in. I'm bullish on this stock. I think it could go to 60. And if I short a put, I'm going to collect $4.60. So I'm going to be $460 go in my pocket. I have the same risk if I own the stock of $4,040 on my 100 shares. Why isn't it $4,500? It's because I kept money up front. I'm not doing this trade. Why would I want to take that risk for that little gain? Well, if I was a smart, rich person, I would sell lots of puts because odds are stock's going up, and I'm just going to keep that $460. That's not how I trade. What about a bull put spread? Kind of like the bull call spread. The difference here is you keep the money, but the max you can make is the amount of the premium. and the max that you can lose has to do with where your strike prices are. And that's pretty small because it still says August. So let me, July, so let me just change it to August. Hit OK. So you're going to collect $200. You're risking $300 to get $200. Boring to me. Or you could do my trade, which is what I call the chicken shit, Scott Synthetic. A synthetic long. Let's go to August dates. We already looked at a synthetic long. I'm going to add to this. I'm going to buy a protective put at 40. And I'm going to show you my favorite trade. So, which does this most closely match? It matches a call. So my chicken shit synthetic is really a synthetic call. It's going to cost me $260 to control 100 shares versus $460 on the call. I am bullish. I feel confident. The most I can lose on the call is $460. The most I can lose on this spread is $760. So I'm saving $200 up front, but I'm carrying $300 more risk. I don't have to hold it to expiration if it goes against me. I like synthetics. I like the call here. I like owning stock. I think Allogene looks interesting. I love the pattern. So on that note, I'm going to just put my buy watch up list because I know some people like to look at it. And just remember what a buy watch list is to me. It's a group of stocks that I find interesting that I'm going to be watching over the next week. And if they meet the criteria that I like to use to buy stocks, then I might buy some of them. You can see heavy in biotech, semiconductor manufacturing, the things that have been working. VIPS is another flag. Here, JD was another flag. Not as much, a sideways move and a new buy signal. This looks very interesting right here as well. So this is my list for the week. And what I'm going to do is I'm going to go into my trade station and I'm going to create in this group, I've combined them into one sheet, but I've added them into what I call my stock watch. And I'm going to be looking for new signals to come in, whether I'm looking at trades, at person stuff, the Q stuff, and others. So on that note, I'm going to say goodbye. Thank you for putting up with 3 separate discussions. I hope I answered most of your questions. Email me for additional if you have them. Thanks, everybody. Have a great rest of the holiday weekend.